to talk now about what might be next here in terms, at least, of the markets. Believe it or not, I know we talked last hour a lot about interest rates. There's a lot of talk in some circles now about more stimulus, more spending, government spending, to get us out of a hole that we may or may not be in. And Bob Wiedemer's with us. Lenore Hawkins is also with us. And Bob, what do you think? Maybe I'm naive in thinking about it this way, but where would we get the money to spend on more stimulus? So what's your thoughts?
Yeah, same place you always get the money for stimulus. We basically print it or borrow it.
Yeah, we're all here anyway.
Yeah. So that's where we'll get it. And I think a little bit of spending increase maybe, but look for the monetary policy. Look for the central banks to be doing most of the action here, certainly the short term after Brexit. And that's where I think you're going to see, if there's any stimulus, that's where it's going to come from, the ECB, Bank of Japan, and the Fed.
Lenore, can we afford anything else? I mean, obviously, and it was one of those questions you already know the answer to, but it's just a matter of whether we should be doing what we're doing, and that's printing more money. Your take on that approach, given what we saw late last week?
Well, it's the only approach that anyone seems to be willing to do. In fact, a recent Wall Street Journal poll of executives around the world found that over 70% of them cited regulation as the #1 challenge that they face.
Right.
Legislators are unwilling to do what it takes to make it a lot easier for businesses to grow, to start, to be successful. They just keep putting more and more red tape on, and when you do that, the only thing you can do is print money. It's easy, it's cheap, you don't have to risk it not being reelected, right? Because if you go out on a limb as a legislator, you may not get your job again. Monetary policy, well, those guys, they don't get elected.
No, of course not. They get appointed, and then nobody's around to deal with it anyway by the time it all comes due. Deirdre, you have a quick thought on this? Because we've been down this path so many times in the past where we say, hey, let's print some money.
Printing more money at this juncture seems like the worst possible idea. We already know that in response to the UK leaving the EU, that it probably has put Fed rises here on hold for at least 16 to 18 months. So I sort of feel like we're already pretty close to zero. I mean, how much lower can you go? And in Europe, they have negative deposit rates already. Can't go much lower than negative.
Oh, Deirdre,
go ahead, Lenore.
We'll be going down there. We'll be going there towards those negative rates because there is no way that the U.S. can withstand. Yeah, I mean, we can't be so much higher than the rest of Europe, and all of this is going to do one thing for certain.
I think
it's going to make the U.S. dollar stronger. Yeah, the U.S. dollar is going to keep getting stronger. That's going to hurt our economy, and we're not going to want that, and the Fed is going to have to reverse course and try to push the dollar down. Now, whether or not they can do that, whether or not the dollar gets away from them, that's another question.
Yeah, remember that
I'm going to jump in here,
no matter
Connell.
what people. Go ahead, Bob.
Yeah, I mean, there's another tool, and I agree, interest rates are low, and maybe it'll go negative. I doubt it. I don't think you'll see any interest rate increases for the rest of the year or even the next couple of years. They can do QE. They can print money. And I think if this market goes down because of Brexit or China crisis or something, 20% or more, they will print money. They will bring back QE. Yeah, that's the end of interest rate increases, but that is one tool they can use. It's not just interest rates.
And Ron, you're more obviously of a political guy, which is our next topic anyway, than an economic guy. But we always look, I think it's in our nature, we always look for solutions when we have a problem as opposed to letting things play out. I don't know if there is one.
I think that's exactly right. And what are politicians doing? They're rushing to the microphone and they're saying, oh, it's chaos. Oh, this is so chaotic. What are we going to do? What are the markets going to do? No, the market will self-correct itself here. I think if you look more long-term, politicians staying out of this and not trying to inject a political solution is the better way to go. But if you're going to do something that's going to be productive and useful, Fed governors,
there's a message for you from Ron Christie.
Stop printing money.
And I also think this is very different than 2008. Connell, you covered that as closely as I did. I mean, that actually, okay, people argue both sides very well. I could see the argument for some sort of intervention at that point. This is not the not the credit crisis of 2008. This is a shock. It's unexpected news. This is digestion time.
Yeah, it creates a lot of uncertainty, and it's going to take a long time for us to play through it. Let me thank Bob and Lenore. Thanks to both of you for joining us.